Let's take a look at some stocks on the move in midday trading here. We're seeing Facebook on the rise here. Of course, Facebook has had a tough year, but today it is up by more than 4%. That's as we get some of these numbers that we were talking about online, but also Citron Research setting a $160 price target on the stock. Right now you can see it's around $129. Citron saying never before has Facebook been this compelling of an investment opportunity. Speaking of undervalued in our discussion we were just having, let's look at Chesapeake Energy as well. Those shares are bouncing, and that's after a board member bought about $4 million worth of shares. That stock has been beat up as well. You can see it's not quite a penny stock, but it's just around $2, rebounding by 13.5% today. It's also a pretty heavily shorted stock. Also, let's take a look at Kohl's, the department store retailer, rising, even though, as we've been talking about, retail sales were strong, department store sales were not quite as strong, but Kohl's has been partnering with the likes of Amazon, perhaps one could argue doing the holiday strategy right. Those shares up better than 5%.
All right, oil prices are edging higher as crude looks to bounce back after hitting its lowest level in 18 months. Joining us now is Bob Iaccino, co-founder and chief strategist at Path Trading Partners. Got a long way to go, though. I mean, at one point it was over $70 a barrel not too long ago, and now we're trading at least West Texas Intermediates, what, about $44 a barrel?
Yeah, it's right around there, Andrew. As of the highs around 76 and change that we got in 2018, we're now down about 43% as of the last session's lows. So yeah, you're right. We've got quite a bit to go here in terms of making that price back up. I don't think it's going to happen. The way I look at crude oil going in is that it tends to do this, right? We saw this in 2014 on the way down. We saw this last year on the way back up to those highs I just mentioned from the end of last year through about second quarter of last year when we hit those highs. I believe we hit those highs in October. And it tends to trend and then move in a range. Now, how long that range is the question, and really what I think crude has done now has established the lower band of that range. I don't expect to see us go much lower than 38. We haven't hit 38 on the forward contract yet, but it could happen. It's a long way before OPEC, who seems to be the only one who's going to do anything to try and adjust prices higher, can get any of that done, given the amount of production cut they promised, given that it doesn't start till January 1, and they only agreed to a 4-month cut at this point, and they're only talking about extending that cut. So seasonals, demand has to kick back in, and the same binary events that have been pressing the stock market lower are pressing those demand forecasts lower for crude oil.
So still a lot of obstacles there. I want to switch over to gold, Bob, because I was really confounded as we were seeing the volatility come back to the stock market that gold wasn't catching a bid. Well, that has changed. It's hitting about a 6-month high now, as we have seen finally people look for a haven and turn to gold. Where do you think we go with that as we head into the new year?
Well, I think we're nearing a top in gold. And by saying that, I don't think that 1,300 is out of the realm of possibility. So getting above 1,270, my target for gold was 1,280. So let's be fair, we haven't hit my target yet, but you tend to go to those round numbers. I think, Julie, when we're talking about gold versus, say, the yen, look at the strength in the yen versus the US dollar. That hasn't been talked about much. When you're looking at the other currencies or the dollar index itself, you don't see it. You see it in the yen, you see it in gold, you see it in the Swiss franc. That's classic flight to safety, right? As opposed to flight to quality. Flight to quality is the return on capital. Flight to safety is the return of capital. That's what gold has really been. So it seems to me that the gold market is trying to say there's more to this than potential losses financially. It could extend into other geopolitical, let's say, non-niceties, like maybe some sort of military conflict down the road. Seems to me that's what gold is expecting. Prior to that, I think that's why gold wasn't rallying, because the dollar was really a return on capital place to be, with the U.S. Sort of economic strength still holding to bear.
Bob, it sounded like you just you got to put us on alert for a Black Swan event in 2019. I have to wrap it up there, but real quick, did you?
I did. Real quick.
That is frightening. Sorry that we have to cut it off there, but
We'll
Bob
talk to you again soon.
we will bring you back to talk about that, co-founder of Path Trading Partners.